Mr. Rubenstein is here with us. You've been talking so much here at WEF about, well, yes, there is opportunities to be made. Business may be pretty good in some countries. Yesterday you mentioned Turkey, but also Egypt. Are these your two favorite countries in the region?
Well, we do have a team that invests in the region, and Turkey and Egypt are among the most attractive places. Of course, the Gulf is a particularly attractive place as well. So our team is fanning out throughout the region, and we hope to make a number of additional investments. We've already made 3 in the region, and we hope to make a number of additional ones this year and next.
Because in terms of the business environment, this region represents opportunities and are cheaply valued, or you just can't afford to miss out?
Well, the emerging countries are doing quite well. The emerging market countries are doing quite well. And I think the Middle East and North Africa is among the most attractive places. Of course, China, India, and Brazil are very attractive. But when you get beyond those three very well-known emerging market countries, the Middle East and North Africa is a very appealing place because of the young population growth, GDP growth, and also the governments are encouraging of capital to come in.
Certain Chinese officials were saying over the weekend that they're concerned if there's too much capital injection, if there's too much QE done by the United States or also Europe, then it will create asset bubbles in the emerging markets. Is this something that you're wary of?
Well, there's always going to be asset bubbles somewhere in the world at some point in time. We've learned that over 800 years or so there have been asset bubbles, but generally good investors can figure out when to make decisions to invest and when not to. But also the problem with asset bubbles is typically when people make highly leveraged investments and they need to get out very quickly. If you buy an asset without a lot of leverage and you're willing to be a long-term holder, I think asset bubbles are not generally as much of a problem.
Overall, are you more optimistic about the future now than you were a year ago? Is it just easier to make business all around?
I think almost everybody is. I think the global Great Recession is largely over. Of course, there's high unemployment in Europe, and there's still high unemployment in the United States, and there's still debt problems in Europe and the United States. But generally, I think the recession that we've experienced is over, and I think it's a very good time to invest around the world. So, yes, we are ramping up our investment activity a fair bit.
So, in general, investors are have more risk appetite, basically?
I'm not sure they have more risk appetite, but I think they're willing to look at things now that they weren't willing to look at a while ago. I think they think that the global GDP situation is much better than it was, and I think some of the problems that have been solved by the legislation in the United States and in Europe, I think it makes people feel much better. So yes, I think investors are feeling a little bit better than they were a year or so ago.
What's your biggest concern for this region? We talked about credit flows, about some banks needing capitalization, for example.
Well, this region is a very complicated place in which to invest because it's so different. The Gulf is in one area, Turkey is another area, the Levant is another, and then Middle East and North Africa. So you have to have different perspectives on each part of this area. So you can't say there's one size fits all approach. Therefore, you need to have different teams and different perspectives, and therefore it's more complicated than investing just in China or just in India or Brazil because it's many different countries here.
But so what's your biggest concern, for example, for the GCC countries? I mean, oil, of course, is one of the driving force behind this.
Well, in the business in which I'm investing, it's very difficult to find good things to buy because a lot of people don't want to sell. A lot of families like to hold on to things, so we often need to find situations where we're minority investors. We're helping a family expand, but there aren't as many opportunities, of course, as there are in the West. Still, if those who are persistent will find a good opportunities, I believe.
Yesterday you were talking about Dubai World and the fact that there was some interest in actually looking at some of the assets. What made you pull back?
Well, I think a lot of Western private equity firms looked at those assets, but in the end, I think the seller didn't want to sell at so-called distressed prices, and therefore I think there weren't a lot of deals being done. I think people wanted to see whether there was something that could be bought very cheaply. It turned out there probably wasn't, and as the market has come back, those assets have appreciated in value.
David Rubenstein, how concerned are you about this quantitative easing? A lot of investors are saying they're actually concerned that, 6-7 years down the line, sure, now we're just bumbling along, but once all this cash comes out of the markets and of the economy in general, we're in real trouble.
Well, I think it's a little premature to say that quantitative easing is a big problem. I think we just don't have enough data to know how it's going to work yet. But clearly, interest rates are very low, and the Fed is trying to make sure we don't have a deflation problem, and I think that's a good thing. Deflation is a more pernicious problem than inflation, certainly at the moment.
David Rubenstein, thank you so much. That was the co-founder of Carlyle Group. Back to you in the studio, Martin.